Here is a fact that might surprise you. The euro has failed to break convincingly above 1.14 against the US dollar for weeks, and this Sunday, July 26, 2026, that is exactly where we stand. Rabobank, one of Europe's most closely watched currency research teams, is actively holding its choppy range view for euro to US dollar, with the pair pinned near that same 1.14 level. Despite occasional bursts of euro optimism driven by European economic resilience, the single currency simply cannot find the momentum to push durably higher. The market is caught in a tug-of-war between competing forces, and understanding those forces matters greatly for anyone with exposure to the euro-dollar exchange rate today. So what is driving this deadlock, and why is Rabobank so confident the range will hold? The clearest answer right now is geopolitics. Tensions centered on Iran have intensified in recent weeks, and when global risk sentiment deteriorates, investors historically rotate into the US dollar as a reliable safe haven asset. This dynamic has been clearly visible since mid-July 2026, with dollar demand picking up on precisely the days when Iran-related headlines have been most alarming. Rabobank's analysts confirmed as recently as July 25, 2026 that these Iran war risks are actively supporting dollar flows, acting as a firm ceiling on any euro recovery attempt. At the same time, the European Central Bank has provided no fresh upside catalyst through its policy stance, leaving the euro without a compelling fundamental reason to break higher. The choppy euro to US dollar environment is having real, practical consequences across multiple sectors this week. European exporters pricing goods in dollars are navigating persistent margin uncertainty, as the exchange rate moves without giving any clear directional signal. UK travelers heading to Eurozone destinations this summer are finding that the rates available at the Bureau de Change are shaped by this broader dollar resilience. For active Forex traders, the range-bound nature of euro to US dollar means breakout strategies are repeatedly failing at the 1.14 area, while range trading approaches, buying near support and selling near resistance, are proving far more rewarding. The 1.14 level has become the pivot point that professional and institutional desks are monitoring on a session-by-session basis right now. Looking at the near-term horizon, Rabobank's central case is that euro to US dollar will continue trading in a choppy manner around the 1.14 zone, with no clean directional breakout expected in the immediate future. The primary upside risk to this view is a meaningful de-escalation of tensions in the Middle East, which could reduce safe haven dollar demand and allow the euro to test levels above 1.14 with more conviction. On the downside, any fresh deterioration in the Iran situation, combined with disappointing European economic releases, could push euro to US dollar back towards the lower boundary of its current range. It is also notable that the Norwegian krone is experiencing a similar range trading dynamic against the euro, which suggests this is a broader theme of dollar resilience across currency markets rather than a story unique to euro to US dollar alone. The bottom line for this Sunday, July 26, 2026, is straightforward. The euro is not collapsing, but it is not rallying either. Rabobank's choppy range view near 1.14 is well supported by the current combination of Iran geopolitical risk, steady safe haven dollar demand, and the absence of a compelling ECB policy catalyst. For traders, the message is patience and discipline around established levels rather than chasing breakouts that are not materializing. For businesses with euro exposure, maintaining a hedging strategy remains prudent. And for anyone simply watching the rate, do not expect a dramatic move this week. Range conditions in currency markets can persist far longer than most anticipate, and the weight of evidence right now points firmly in that direction for euro to US dollar.